Hello, I'm Andy and I will show you how to prevent and how to recover losses when trading Forex. Now you can do this manually and I will explain you how, and you can also do it automatically, and this is done by using an auto recovery. The auto recovery expert advisor, but can be downloaded for free. Go ahead and try it on your demo account. It is fully functional, or purchase, or if you stick with me for a little longer, I will give you a discount code that you can use to make your purchase even lighter than $100. Now, talking about preventing losses, there is one method that most of the traders use, and I will explain this. Also say that most of the traders fail when trading Forex. Most of the traders don't make money, they are losing, so there must be a connection, I say, and this is the stop loss. The stop loss, it's a great way to have your account equity somehow saved, but it is not a good way to prevent losses, because what you do when you open in this example a buy trade is just instruct the trading platform to close this trade if the price goes against you at a stop loss level that you determined previously, here 1.40 something. So basically it means that if this happened, you will have lost this number of pips anyway, and this is unrecoverable, and depending on the lot size you have used, that can be a little or a lot. And more important, depending on the market situation and the price and what's happening in the world, or who or why they decide to manipulate the markets, or maybe you just had a bad day, you will have a few trades that will close at stop loss, and that will lead to your account being emptied later maybe than sooner. And about recovering the losses, I'm going to show you how your account might be emptied sooner because again, most of the traders know about martingale as a way to recover losses, and martingale, being borrowed from the gambling world, it is unfortunately treated as a gambling method by most of the traders who are using it, and they are of course losing money. And what they do is basically they open consecutive trades, 5 in this example, and they keep increasing the lot size. Here we have doubled the lot size 1, 2, 4, 5 times, keep hoping for the price to finally reverse and go in our favor. And usually martingale doesn't care about trading signals and what's happening on the chart. It is a method determined by greed and fear, and it will never work, or it will work 1 or 2 times, but it might lead to your account equity being drained much faster than using a stop loss, because until the price will decide to go in your favor, finally rise, you might have lost your equity at 4 lots, for example. So it is way more dangerous than the stop loss. The stop loss will delay the inevitable, the martingale might make it happen. And that leads us to what the hedging expert advisor is and what it does. It is a hedging expert advisor. Like I said, you can download it and try it. Find the explanation on RobotFX.org. I will also explain them here. And what hedging is, it's basically, hedging is a little misunderstood, because I think it's because it requires a little more mathematical calculations, and most of the people don't like math. Fortunately, the Auto Recovery Expert Advisor does that for you. I will explain how, very simple. So if I decide, or if you decide to open a sell of 1 lot size and calculate or determine the distance where to put a stop loss, instead of using a stop loss, place a buy stop. A buy stop at a higher lot size than the initial order, and the seller hedging order of a higher lot size. So obviously you have 2 options, 2 possibilities. The price can either go down and make you money from this sell, or it can go up at some point and trigger this buy stop that will become a buy. And from the point it will, from the level, it will trigger this buy stop. We have the 2 possibilities again. It can go either up, and at this point, sooner or later, it will reach a break-even profit of a profit break-even. And when I say profit break-even, I mean the the wins from the second trade from the hedging order will overcome the losses from the first trade, from the sell. So at some point from negative it will change into positive, and that at zero level the expert advisor or the trader has the option to close the first sell, the first trade, and place a break even for the winning trades, which is the buy trade. So it is basically this is what they mean when they say transform the loser, change the losers into winners. They are referring to hedging. Or of course you can close both trades if you are not too greedy, or if you are not sure if the price will go further up, you can close both trades and focus on opening again a profitable trade. And of course we have the same two options from here. The price can go either up, like I said, and make money, or recover the losses and then make money, or go down. But if it will go down, then the expert advisor, as soon as this buy stop was hit and the buy order was open, the expert advisor already placed another hedging order, which is the sell right here. So the same scenario will happen again. We will either reach profit break even or change again. And I know why some of the traders also get scared of this, because somehow it looks like martingale, but very, very far from the distance. There are many safety triggers. It's not just doubling the bet blindly. It doesn't even have to be double. So I'm going to show you on the chart and then explain the settings. It is Sunday, and I'm trying to show you in the strategy tester. Basically what happened is that the expert advisor opened this sell right here at 0.1, and then, sorry, it didn't happen like this. You open the buy first. Let's see the lot sizes. You open the buy at 0.1. So this is the first order. It placed the pending order that was the sell stop. As soon as the price hit the sell stop right here, that sell stop became this sell, which number 2 now opens. And the same at that time, exactly the same that time, the expert advisor played the third hedging order, this right here, the buy stop. And when the price went in our favor, you could see the stop loss being placed right here, break even, and both trades closed when they have reached minimum profit. I think with these settings that I have right here, the minimum profit is set to $1. So as soon as the profits from the losing buy and the profitable winning sell reached $1, the expert advisor closed both of them, because this is how I instructed it here. I didn't instruct it to close losers and set break even. And that leads me to the settings. I suggest I start explaining the settings better. Go ahead and download it and see if it is what you need. And I have promised a discount coupon. I put it right here. The discount coupon is video 10 YouTube. YT video 10. So use this and you'll get a 10% discount for this expert advisor when you pay by debit or credit card. Unfortunately, PayPal doesn't allow discount coupons. You have to pay by card, and don't worry, it is powered by Stripe. It is another payment gateway. It is not even our website. It is secure. Now let's go to the settings. First of all, we have the client email. This can be ignored if you are trading on demo accounts, or if you didn't purchase our expert advisor. It also means you are trading on demo accounts. because you cannot use it on live accounts as a non-customer. So leave it empty for now. The recovery zone is the distance between the opposite orders, which is in pips, between the sells and the buys. Actually, it must be said that is the distance between the last sell and the last, the last order and the next, pardon me, and the next pending order, next hedging order. It can be plus and minus 1-2 pips, depending also on the slippage, and if the recovery zone is too small. If it's big enough, as it is right here, a decent size, and I suggest don't make it too small. Hedging is not should not be used like this. Just place it where you normally put a stop loss. And for those who are asking us all the time about the most profitable settings, the default settings that the expert advisor comes with, most of our expert advisors, are somehow optimized for each one chart. From there, you can tweak the settings if you change the time frame or the trading instrument. Now, the take profit has two functions. It can be a normal take profit. However, do mind that if you want the trade to close at 75 pips in your favor, you must enable this, which is disabled by default. Close trades at take profit must be set to true. And also, please mind that the take profit will obey the minimum profit. The profit on the chart must be at least equal to minimum profit. If there is only one trade, obviously that will be the case, because it will be a profit for sure. However, if there are two more trades, opposite trades, I mean, buys and sells, the expert advisor will ignore the take profit if the minimum profit will not be reached. It is mostly for multiple trades. Now, the second function of the take profit is to use to determine the lot size of the hedging order. To determine the lot size of the hedging order, first of all, I suggest using the hedge multiplier, and from here you can choose either multiplier you want. It accepts decimal points, of course, decimal numbers, to better determine the lot size you are willing to open your trades. However, if you don't use the hedge multiplier, the expert advisor will use the ratio between the recovery zone and the take profit to determine the lot size. Now, I suggest you leave this for later, especially if you don't like mathematics. But if you want to try it, it is explained on the page better. The ratio is used to calculate the next recovery trade, like this. If the ratio is 1-to-1, for example, recovery zone is 50 pips and the take profit the same, 50 pips, then the hedging order will double the size. Double the size of the previous, of course. So that is the difference, and it seems it's mostly for more maybe mathematically advanced traders. I know a few, but if you are not one, you like to simplify things, just have the hedge multiplier to true and choose a hedge multiplier here. And then we have the option to prevent double pending orders. This should normally be set to false, but there was one broker reported by one of our clients that for some reason, I imagine I forgot their name now, the broker, probably one of those that appear and disappear. They were placing double orders. Instead of one hedging order, they will place two of them, and this setting it has been implemented to prevent that. It basically checks the number of the hedging orders, deletes them, and then places only one. Normally it should be false, just to make the export advisor maybe a little faster, but it doesn't work. It doesn't mind if you set it to true or not. Like I said, depends on the broker. The next option, the next settings, the hedge last order lot size. It instructs the export advisor to use the hedge multiplier for either the lot last order opened or the basket of orders. I will explain in a bit. For example, if this is set to false, then the export advisor, when hedging, will consider the sums of all the opposite orders lot sizes. We had the hedging multiplier set to true. In this case, if I open a sell here, the next hedging order will be 2 multiplied by 2, right? 1 times 2. And if this order will be triggered, the next hedging lot size will be 3. And this because the export advisor will consider all of the orders. So 1 plus 3 equals 4, right? And 4 is, by the multiplier, double than 2. And the opposite buys and sells. And that means that the next order will be 6. That because 2 plus 6 makes 8, and 8 is double than 4 and the cells, and so on. And this is basically what it means by hedge last order lot size. This is what happens when hedge last order lot size is set to false, because it doesn't hedges only the last order, it hedges all of them. So if it's set to true rather than false, then the export advisor will hedge only the last order lot size. So in this case, I'll have first order 1. I remind you the multiplier, it's still 2. I didn't change it, hedge multiplier. Next, we will double this. 2 by 2 equals 4. Double the last 4 by 2 equals 4. Double the last 8 by 2 equals 16, and so on. So this is the difference. You can either hedge, determine the lot size based on the amount of all opposite orders, or only the last one. I hope it's clear. If not, feel free to leave a comment and I'll try to explain it better. Now, the next settings we have, it's the break-even. Obviously, the export advisor places break-even if the price goes in the favor. Make sure you don't set this too small, though, because we want to hedge, so the price will not close trades that just opened right now. I don't use break-even at all when I'm hedging, but this is my trading style. Maybe you want to use. The idea is for the export advisor, like I said, for the price, like I said, not to close the hedging order and then the price continue to fall, because it will place the next hedging order maybe a little further away, a little further than 50 pips than the initial order. So there is a very important setting called maximum orders, and it allows the trader to limit the numbers of the open trades on the chart, and it is very useful. It is set to 7. However, depending on your equity, depending on your lot size, and depending on how many orders you can open at the time, you might want to decrease this, or if you are trading micro accounts, you can also increase it. I think 5 to 7 open opposite orders on the chart should be enough. If that is the case, you might be stuck in a consolidation zone, and if you are in a consolidation zone, then you should stop trading at all, because you will never know when the price, and stop trading and focus on maybe hedging manually, because you should probably wait for the price to come on. to leave the consolidation zone and form another trend or continue with an existing trend. Hedging consolidation zone is not recommended simply because of that, because the expert advisor might place too many opposite trades, and especially if the recovery zone is too small. That has to be the weak point of hedging. Fortunately, by setting this safety triggers, the proper levels, you will not reach that level. So there is the minimum profit that I talked about of $1 right here. You can set it to 0 if you want, which is a really break-even, profit break-even. And when the sum of the opposite orders reaches 0, you have the option for the expert advisor to either close all open trades on the chart, and this is good if you want to close the sells and the buys on one chart and focus on starting again one trade, or you can close the losers and set the break even. I've talked about this before. You have the option when both sells and buys reach the minimum profit. And by the way, this can be also a negative number. Maybe you are willing to lose $10 for the expert advisor to take action, or maybe you want the expert advisor to maybe you want to have some profit before the expert advisor will close all open trades on the chart, or close the losers and set the break even for the winners. And also the option to do nothing. This might be useful for some traders following some other trading styles as well. My favorite is to close everything and start again. And however, if you choose to close losers and set break even, you can set a trailing stop, different trailing stop right here. 30 pips might be too much. Again, depends on your trading style, and also a trailing step, which will apply. Both of these will apply only to the remaining winners on the charts. The trades, winning trades that you want to trail to follow them. Now there is the option to close trades that take profit. I've explained that already. At this, obviously take profit. But do mind that this will happen again when the profit will also reach the minimum profit. And there is also the possibility to close all trades when the maximum orders has been reached. So as soon as the expert advisor will place the last trade, then it will also close all trades on the chart. It's a hard way to limit losses, but might be useful in case of emergency. The slippage, I think, is self-explanatory. We all know what that is. Very important is the magic number. Like I said, this expert advisor does not open trades by itself. It will hedge trades open manually or by other expert advisor. If you want the expert advisor to hedge trades manually, leave the magic number to -1. This basically means no magic number, as trades open manually from the this is the right from the MetaTrader's buttons buy and sell they don't have a magic number. And if you are using another expert advisor to open a trade, make sure that their number matches. Each expert advisor should have a magic number. Yours is somewhere either in the expert advisor settings and you can change it, or it is coded in the expert advisor. You will find it in the history chart of the open close trades. There's the option to show the comments on the chart. It will show some nice information here, text, the maximum lot size, minimum lot size from the broker server limitations, also how many trades are opened on the chart, what is the profit, their profit. The last important option is regarding trading, at least, is to open a trade if pending hedge fails. That might be useful when you, for example, let the expert advisor to run during the weekends and some major event happens and the price somehow skips and creates a gap, skips your pending order, and if it will skip it, that pending order will not be triggered. If that will happen, if gaps will happen, then the expert advisor will automatically open a hedging order. It is also explained on our website right here, like when the price jumps to jumps over a pending order. Basically, when the pending order is in a gap. We have a lot size for testing. That's for testing only. Testing, by the way, like I said, in the strategy tester, the expert advisor places orders randomly. So don't search for profitability there. And there's an option to enable full logs that will be useful for us mostly in case you want to report a bug. So far, we didn't have too many, or actually not at all, bug reports. But if you think something is wrong, let the expert advisor trade, enable the logs, and as soon as something strange happens that you think it shouldn't happen, send us those logs that you will find in expert advisor in the journal. Usually it should be led to files because the size of the logs might increase on your hard drive. And this is it about the settings. Now there is one more thing that needs to be said about the hedging and the recovery zone, and this is that if the recovery zone is too small for the expert advisor to be able to place the hedging order, so it will not be able to place a pending order because of the spread, then the expert advisor will force opening a hedging order, an open normal order basically. So this is what happens. Sorry, this is what happens, and it needs to be explained. Let's say, for example, that the recovery zone is very small, like 10 pips. Now it should never be 10 pips because, like I've said before, because of how the price can fluctuate very fast in a very short period of time, leading to the maximum orders numbers being reached. But I'm using this for an example. So because of the spread, if the expert advisor cannot place a pending order, then it will open a hedging order, just like that. Here we can see it did manage to place a pending order, actually quite a few. I'm going to change the recovery zone to even a smaller size just for the sake of this demonstration, and stop. So let's see what happens. So I was talking about this recovery zone very small because of the spread. The expert advisor cannot place a pending order, and that means that the expert advisor will open a buy, will not be, or the trader will open a buy. The expert advisor will not be able to place a sell stop, and instead it will open a sell. Of course, the lot size will be calculated according to the hedging settings, the lot size multiplier, and so on. And after it opened this sell, it looks like it did have time to place, it did have enough space to place the buy stop like a normal pending order. So this is what happens. In a nutshell, when the expert advisor cannot place the pending order due to the spread, it will force opening a hedging order, not a pending order. I hope this is clear. So this is all that needed to be said about auto recovery expert advisor and about hedging and how to recover losses and prevent losses when trading. And if you have decided to use the expert advisor to help you in your trading, you can scroll to the end of its presentation. Under the video, you'll find the download links for the free demo versions and also the purchase buttons. And do mind that if you have a a discount coupon. It can be used when you pay by debit or credit card, which is powered by Stripe. Very safe, very secure. Just add the promotion code right there. The promotion code will not work with PayPal, but we're still offering this as a payment option. Also, wire, money transfer, crypto, do refer to Google to get the exchange rate before the payment. And after you made the payment, let us know. Send us your live trading account numbers, and we will customize Expert Advisor for you to trade on your live account numbers, as well as unlimited demo accounts. Those do count. Thank you for watching, and leave a comment if you have something to say or if there's anything unclear. By the way, this is our new website. All the previous comments and reviews disappear. They couldn't be imported. I remind you that we were hosted on robotfx.ro previously and robotfx.info. We have moved to robotfx.org for easier experience and easier for the clients and traders to remember our new address. Thank you for watching and good luck trading.